Leading indices, Sensex and Nifty, fell on Monday as a result of subpar global cues on persistent concerns about contagion risks in the global banking system. Despite the UBS Group's acquisition of troubled Credit Suisse, the Nifty 50 dropped below the 17,000 point level, while the BSE Sensex was down more than 800 points at 57,177. However, towards the end of the day, due to buying, it ended up closing at 360 points in the red. Investors are attempting to gauge the potential speed of the economy's slowdown and whether the issues in the banking sector would result in an accelerated deceleration, according to analysts. Investors are concerned about the cascading effect of the global banking system, even as Swiss regulators prevented a financial disaster by negotiating a $3.25 billion takeover of struggling Credit Suisse by rival UBS. After learning that $17.24 billion of the bank's additional Tier 1 debt will be wiped out down to zero as part of the agreement with UBS, Credit Suisse bondholders became upset. Peer effect. The decline in other Asian stock markets was being followed by Indian markets. The Hang Seng in Hong Kong fell by 2.65%, as did the Nikkei in Japan and ASX 200 in Australia. The global markets, which were already hurting from recessionary worries and constant rate hikes, are now occupied with making educated guesses about which bank may be the next to fail. As the rate-setting panel of the US Federal Reserve meets on 21st and 22nd of March, the world's largest central bank would be under pressure from investors who are blaming the Fed for its pace of hefty rate hikes over the previous year to chill the economic growth and inflation. FII pressure. FIIs have been on selling spree for the most part of this year. On Friday, foreign investors sold Indian stocks worth over Rs 1,700 crore, taking the total sell-off in the calendar year to over Rs 23,000 crores. Adani stocks. 9 out of 10 Adani stocks ended in the red zone today after it was reported that the ports to power conglomerate has indefinitely suspended work on its Rs 34,000 crore coal to polyvinyl chloride plant in Mundra. The upward trend that had been seen over the previous two trading days came to an end today, with the Sensex losing 361 points and the Nifty failing to retain the psychologically significant 17,000 level. The Sensex has lost more than 2,700 points since the Silicon Valley Bank crisis started on March 9th. Since then, the forced bailout of Swiss banking titan Credit Suisse and the failure of several regional US banks have increased the threat of a worldwide banking meltdown.